Morning, guys. I'm just going to give the rest of the attendees some time to enter the room. I've opened it a little bit earlier this time, so we can get started on time. Good morning, Daniel. Good to see you again. No more exams. No. Well, I've had to extend my CFA exam. It's because I've actually enrolled on an economics degree now. So I want to understand. Yeah, for the CMT, you're asking me if I did all three parts. Yeah, for the CMT, I've completed all three parts. So I've got the CMT now. But I started my CFA, and that's incredibly intense, and I need to extend because I'm also pursuing a degree in economics now as well. So I've kind of, yeah, it's kind of a little bit too much at the moment. Hi, Farnham. Good to see you. Right. So look, guys, I'm going to get this started. So look, a very good morning. Thank you so much for taking the time out of your day to be with me, to be with us. Although I do see some regulars present here today, I also see some new names. So welcome. My name's Aaron Hill, and I'm one of the market analysts here at FP Markets, and have been for the past nearly 2 years now. So this presentation is part 2 to the webinar I gave last week on, I think it was the 23rd of June, and it was the basics of the Quasimodo pattern. As I mentioned in this webinar, the Quasimodo arrangement, in my experience, provides traders with an almost objective method of plotting support and resistance in the market. This can, of course, be a blessing for newer traders, right? So for those struggling with the many ways in which traditional support and resistance can be applied. So look, before I continue, I guess I am coming across loud and clear, and the welcome slide here is visible. Any issues, guys, as usual, please do let me know in the chat box, and I'll try and get the support team to assist. Also, for those who were not at my previous presentation on the QM pattern, please do consider checking out the part 1. And also, I'm curious for those that did attend, if you had a chance to look into the pattern further, and did you conduct any form of back testing or anything like that? Thank you for the confirmation. Thank you. If you conducted any form of back test, do let me know on your results, and it would be good for a discussion. So look, as I highlight in every single webinar, a recording of this presentation will be available through the normal avenues, right? So we have the easiest, in my opinion, is through the FP Markets website, or and you can find that under resources, or you can alternatively just shoot over to the FP Markets YouTube channel, and you'll have all the list of archived webinars available. So yes, as usual, guys, look, just a quick run through this disclaimer. The information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. Now, look, as I say in every single presentation, the nuts and bolts of the disclaimer is really there to tell us that anything discussed or presented here is not investment advice, and you should always do your own research in anything trading or investing. Right. So, hi, Angelo. Can you please do a quick recap of the last webinar? Yes, I will. That's part of the, as you can see here, a recap of pattern structure. So that leads me nicely onto the first point. So look, I don't intend to bore you guys by repeating old content, but as I'm sure you'll understand, it's imperative I review what was covered when we last met, which was what a QM is, the correct application of the QM on charts, and the use of the QM in our trading. Now, for me personally, I've been trading for I've been charting for more than 12 years now, and the QM is one of the, shall we say, the more powerful and, for me, the more reliable ways of determining support and resistance on the chart, which is why, I'm really surprised it is not a more talked about approach. How I intend to move forward during this session, as you can see here, I'll offer a brief recap of pattern structure and application to the charts. I'll also go over some chart examples very, very quickly, and then we'll head over for some live analysis. I actually have a couple of setups I am watching right now, and we'll talk about them. Look, at this point, I do also encourage you to list in the chat box any setups you're watching. If they include the QM formation, that would be fantastic. And then we can look at these charts together at the end. Okay, so look, for those that were at my previous presentation, you will recall this, this slide. Although it's basic in form, it really does a good job of showing you the arrangement of the QM pattern, which is also sometimes referred to as the over and under pattern, I believe. Okay, so look, so as you can see, the pattern consists of 5 legs, right? So we have 1, 2, 3, 4, 5, both for the bearish and both for the bearish and bullish Quasimodo pattern. Now, the first leg is the initial leg into the formation. At this point, we really don't know what's going on. Leg 2, we really don't know what's going on here, other than the market is in a retracement. Now, look, just to be clear here, guys, the Quasimodo pattern is a reversal formation. So you'll usually see this coming off of a trend. So this will be this was a, let me just get the pen up. So this would be a higher low at this point, higher high, higher low at point 2 here, and a continuation to the upside as another higher high. At this point, we really don't know what's going on, other than that we are in an uptrend. Now, at this point, point 4, we have made a lower low. Now we are in the seat for a potential bearish Quasimodo pattern. So you can see we have legs 1 going into the pattern, leg 2 as a retracement or a dip within the trend, leg 3 as a normal continuation within the trend to form a higher high, but leg 4 forms the lower low. Now, this is where things become interesting, because we have a potential trend change on, or a reversal on the table. And with if we get a pullback at point 5 that reacts from the Quasimodo level, the left shoulder, remember guys, I said you have to extend from the left shoulder through all of this, I won't say mess, but you can say that this is the fake out. You have to extend a level through all of this mess to connect with this point here. Now, why I've left this rather handsome looking chap on the screen is simply because of where I believe the Quasimodo pattern got its name. I believe it's from the fictional, the main character from the novel, The Hunchback of Notre Dame. And look, if you look closely, he's shaped somewhat similar to the bearish Quasimodo pattern. And with a somewhat deformed head and shoulders, as does the bearish Quasimodo pattern. It's not a perfect representation, but I believe this is where it's come from. So let me just clear these drawings just to make sure. And look, so just to confirm, guys, this is the basic structure of the pattern. It's nothing really complex. It may appear complex to new traders, but really all it is a 5-leg pattern. First leg goes into as I've said, the first leg is the rise with the trend. Let me get the pen again. Sorry, guys. The first leg is the rise into the trend. Second leg is the retracement that forms a higher low. Third leg is the continuation within the trend that forms a higher high. Now, at this point, we really don't know much what's going on. It's only at leg 4. Once we create that lower low from this point here, okay, and we crunch through that level there. And at this point, as we start pulling back, slowly pulling back, this is when you have a potential shorting opportunity on the table, guys. So it's the same for a bullish Quasimodo pattern. I won't go over that because it's exactly the same. It's just a mirror opposite. Amazon, Bob. Sorry, I'm not sure what you mean. Amazon. Are you talking about the Amazon stock? Oh, sorry, you're talking about the Amazon stock as a potential for a QM pattern. Let me know the time frame, Bob, and I'll have a look at it at the end. No worries. All right, so okay, let's move on. Right, so I also highlighted in the previous presentation that there is a difference between, as you can see here, the bearish Quasimodo pattern and the head and shoulders top pattern. I often get that question asked, so I thought I would go over it again. I'm sure you can see by the slide here, there is a clear difference, right, between the two formations, despite both configurations offering reversal structure. The first notable deviation is the QM pattern lacks a right shoulder before the pattern is confirmed, right? So at this point here, at point 4, the leg 4 and leg 5 it does actually form a right shoulder at this point here, but this is where we enter short. Whereas with the head and shoulders, you have a right shoulder, and you're not entering short at this point unless you're not following the arrangement of the head and shoulders, the correct arrangement. You would be entering short at this point here. Whereas with the bearish Quasimodo pattern, you're entering short on the right shoulder. Now, the other point I really wanted to make clear was the neckline. So with the neckline of the head and shoulders top pattern, ultimately you want your neckline to be either horizontal, as you can see here, or slightly ascending, right? And that is primarily because you do not want to be working with a descending neckline, because that would get you in down at this point here. And if you place your stops above the right shoulder, which is common, you'd have to make up quite a bit of distance before you even see 1 times your risk. I hope that makes sense, guys. But ideally, you want to enter in at this point here or this point here for the head and shoulders top pattern. You know, some aggressive traders do try to anticipate the right shoulder, and that's fine. That's totally down to how they've tested the pattern. But traditionally, you would look to enter on the break of the neckline, preferably a close below the neckline. But with the bearish Quasimodo pattern, if you were to apply the same principles, your neckline would be, you know, very, very unfavorable. I hope that makes sense. So if you really wanted to compare the bearish QM to the head and shoulders top, your neckline would be down here somewhere and your stop would be right up there. Not great. Not really not great at all. As I said, with the bearish QM, you are in at this point here. That's mainly the big differences. With the bearish QM, you do not have a right shoulder. With the head and shoulders top pattern, you do have a right shoulder, a defined right shoulder. The right shoulder is only formed on the bearish QM after the pattern is active, after it's been confirmed, after you're in the market. And also the other point, of course, is the ascending, the necklines, which is unfavorable for the bearish QM pattern. And it should be either horizontal or ascending with the head and shoulders top. Right. Let me just see. Okay. Thanks, Bob. I'll check that out at the end of the presentation. Thank you. Right. So with that in mind, let's clear this and move on. Any questions about these guys, please do fire across and we'll try and get this going. Now, look, also really quickly, I think it's important I cover this point again, as I received a couple of questions relating to the psychology, the chart psychology in the case of a bearish, as you can see here, a bearish QM pattern. So I will go over this again. So as the QM is a reversal structure, as you can see here, we are in an uptrend, and the QM, the bearish QM, is a reversal structure. Look, so we need to see some form of trend preceding the pattern. Traditionally, I do have a 4-leg structure that I work with, and I'll show you this at the end of the presentation, or not at the end, but when we hit the charts. But overall, traditionally, you would need to see a trend preceding the bearish QM or a downtrend preceding the bullish QM. So obviously, trend traders will be drawn to this movement, of course, right? So buying the dips at this point here. So you'll have dip buyers coming in at these points here. You'll also have breakout buyers buying the break of these highs here, right? So you have breakout buyers coming in at this point here. And you'll also have what's known as, you'll also have counter trend sellers coming in at this point here. Oh, whoops, sorry guys. You'll also have counter trend sellers coming in at these points here. Right, so that's the basic makeup of the trend. So once you get to, I've already basically explained this, but I'll go over it again. So once you get to point 1, again, we do not really know what's happening. We have sellers coming in here, likely coming in from resistance to the left of price, counter trend sellers coming in from this point. That forms the high. We then see a retracement to the downside, which then attracts dip buyers, especially when we see a bottoming formation present at point 2. This is when you'll see dip buyers coming in to try and buy into the trend at cheaper prices. As we continue higher, you'll have more buyers joining the flow at this point here. And then at this point, you'll have counter trend sellers attempting to fade any reaction from previous highs at this point here. It's only once we break out above here, stop out all of those counter trend sellers and fill breakout buyers' orders. We'll fill those orders at this point here. Then we'll have a continuation to the upside, and the process repeats itself again and again and again within the uptrend. It's only once you get to point 4 that things start to become interesting, because at point 4, leg 4, sorry, the breakout buyers that bought at this point here are now in deep trouble, right? They're in a lot of trouble as price draws back to their entry. Let me just get the pen on. Draws back to their entry level at this point here. You see, it becomes even more painful once price enters into negative territory. And what this is referred to as a ball trap. Okay, it's quite simple. Breakout buyers are trapped within this area. Okay, breakout buyers are trapped within this area. Counter trend sellers also have their stops filled, so it's an area of pain. Hence why I really refer to this as a fake out pattern, although I do also call it a Quasimodo formation, just to aid understanding for everyone listening. But at this point, it's an area of pain, right? Because there's so many. So those that sold at this point here are now in agony because they've had their stops taken, and what happens is they see price going in the original direction they initially planned for, which I'm sure all of us can relate to, right? We enter a position, price stops us out and continues in the initial direction we initially planned for. And this is what's happening at this point here. So we see price selling off as sellers look to jump into this, as those traders that missed were stopped out here, they're trying to get back in. So look, further selling pressure develops at this point here, and we eventually break the higher low at this point here. Now, what this does is puts those who bought at the dip here either at break even. So many of the traders, once we've broken this high here, they'll move their stops to break even, and these are now taken. So these traders are now out of the market. There will also be some traders that do not reduce risk to break even, and by clipping below this higher low at this point here, sell stops will also be triggered, right? Why is that? Because these buyers place their stops below here, okay, below this point here. And what that does is also bring in breakout sellers. Okay, so with all this momentum, what you'll see is larger players buying into this because they know of all this activity below here. So what you'll see is a pullback form. Okay, and in this pullback, you'll start seeing sellers coming in here, coming in here, coming in here, coming in here, and eventually you'll see some resistance form at this point here. Now, for me personally, I always look for a QM formation to form in hidden locations, if that makes sense. I don't want to see this level connected with a very obvious area of supply. I like to see what I like to see is price come higher, take out a supply area, and then react from this area, because I know above the supply area there will be buy stops above that area that will be filled, and I know that larger players require that buy stop momentum to sell into. So we break above the supply at this point here, and then we react from the QM, preferably as strong as possible, really, because if you have larger players at this point here, you'll generally see a large reaction take shape. Okay, I do see some questions coming in, guys. Let me just wrap this up. So I've really finished this part here. If there's any, let me just check the questions. Okay. So we have a question from Mark. What if the volume is quite low in leg 4? Does it still validate the pattern? Look, as long as price, let me just remove these drawings. As long as price breaks this low, I mean, look, I'm talking about the FX market here, Mark. So the FX market is, it's very, very difficult, if impossible, to lay your hands on genuine trading volume because of the decentralized nature of the FX market. So you have to rely on ticks, which is fed by your broker. So if you're talking about stocks and things like that, that's a different story. But for me personally, it doesn't matter if the volume's low. I get why you're asking that, but because a pullback on low volume would obviously forecast a potential rally to the upside, right? I do understand that, but no, for me, I've never really taken into consideration volume in that sense, because I've always traded the FX market. So as long as we have a break below the higher low at point made between 0.2 and 3, we're good to go. Now, if you're asking me, would I like to see low volume coming in at this point here? Preferably, yes. But as I said, I want to see something broken here. I want to see something. I don't just want to see one candle here, one candle there. I want to see some action within here. So a supply zone or something like that, that preferably reacts, right? So what happens is you'll see trend sellers coming in at this point within the leg of 0.5, coming from this supply, thinking that this is the area to jump in, but only to get stopped out and react from our hidden, almost hidden, we want it to be hidden, Quasimodo resistance. Yes, look, I can't pronounce your name. I'm terribly sorry. I'll just call you G, if that's okay. I think we would understand better if you used a real chart. I totally agree, and that is on the way. So just bear with me there. I'm just trying to. Okay, let me just clear these drawings. And so look, here we have some charts. So I've found the best way to really learn the intricacies of pattern is certainly repetition till it's ingrained in your vision, if you will. So confluence with other technical tools is certainly something we can also touch on, right? So the QM converging with other technical tools is certainly something you can look at. Also, there's QM support term resistance, which is something we can also look at. It's a very important concept. So up on the screen, we now have the dollar CAD, and this is the monthly time frame, guys. This is quite an old chart, and for some reason my mouse has stopped working, so I apologize for that. Just bear with me, and it's complete. There we go. Thank God for that. So anyway, so we have a Quasimodo support term resistance. So as you can see, we have the Quasimodo support low here. This is the low point. This is the high point. This is the low. This is the fake out. This is the bear trap. And we have a continuation to the upside. Now, what happens when we get back to this point? Nothing. Okay, we just whipsaw straight through. It's a clean sweep of the level. So when this happens, excuse me, when this happens, these areas, look how hidden this is. This is relatively well hidden within this leg here. There's nothing here telling you that there's any form of resistance, right? So just get the pen up. So there's nothing here really telling you that there's any form of resistance. But what happens is we have a two reactions from this area, which, you know, for anyone that's into their chart patterns, we have now a double top pattern forming from this area. And look, I cannot remember whether this played out or not, but we did actually break the neckline as well. So this is certainly some. And the thing is, look, what I was saying in the previous post is, look, we have something to break here. Look at all this. Look at what happened here. We have a monster of a supply area here, okay? And we could even extend that to this point here, another monster supply. Look at all the pain driving. We had sellers coming in from here. We had sellers coming in from here, sellers coming in from here, sellers attempting to come in from here, and all the pain going through these areas stopped at this point here. This hidden, almost hidden Quasimodo support term resistance. And again here, okay, I probably wouldn't have taken this one, but this one is almost mouthwatering in the sense that there's nothing really there telling you that, nothing obvious telling you that that this is where sellers could potentially come in, because the approach is important with these QMs as well. So we break, as you can see, we have sellers, 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 pain. Okay, this is the area of pain for me. I see we have a question. There could be some gaps in the lower time frame. There certainly could be some gaps in the lower time frame. Now, if you have, that's a very good question. If you have a QM similar to this, a Quasimodo support turned resistance similar to this, and there's a gap here, all the better. They are fantastic. If there's a gap there, so if we have a gap at this point here, and this is completely open, and we have a QM support term resistance at this point here, fantastic. That's completely hidden from everyone. No one's really looking at that except except some of us, obviously, that understand the QM support term resistance and understand that on the approach to that formation, we need to see some stops taken. And we see stops taken above this supply and also this supply. This is what's known as stack supply, guys. So we have stack supply at this point and also here as well. So the amount of pain that was taken when we come up above this area is just insane. So I hope that's clear. I'll move on to the next chart. So, okay. So this is the same chart. So this is the dollar CAD M1 again, monthly chart. But here we have a traditional, not traditional, because this is more of the 4-point structure, right? The 4-leg structure we have. Let me get the pen out. So we have our low, our high, our fake out. Here we have almost like a double bottom fake out, right? The confusion here was incredible, right? So we had all of this as our bear trap taken below these lows, but then we continue higher, and then eventually do retest the level at this point here. Now, what did we break out? What did we break on the way down from this area? Now, we do have a supply at this point here, which was reacted at this point here. What this does is creates trust, right? So as price is coming down here, yes, we have broken this low here. I get that, I see that, but this is a demand that actually created some trust. So we had the demand form here. We broke out to the upside, broke this high here, and continue and retested the level at this point here. This creates trust, and what happens is traders will try to come in from this point here and eventually get, for lack of a better word, smoked, because all their stops are taken out at this Quasimodo support here. And we see a reaction to the upside. So I hope I see. Okay, so look, I'm going to try and get to the questions at the end, guys. Just let me get through these slides and we'll hit the charts, and that'll be the best place to ask any questions, I believe. Right, so I think we have one more chart, if I remember correctly. Yes, we do. Okay, this is the euro pound. Look, I really, these are really cherry picked examples, and they're not really they're just showing you really what's going on, how I'm looking at this. So as you can see here, we have a QM, a Quasimodo support. This is your traditional one where you have the trend, the lower lows, lower highs, lower lows, lower highs, and then we have the low, the lower high, and then the subsequent lower low, which is actually your bear trap, right? So you have your bear trap at this point, but at that point, we do not know it's a bear trap. So then we have a continuation to the upside. But look at, as we come down, look, even though there is, look, this is no guarantee. this is not going to offer you a guarantee of trading success, right? Even though we had a clear area of demand here and a clear test, we created some trust. Look, we almost come within the pip of this area. We almost did. So what we did is we broke through this demand, come within a few pips of this Quasimodo support. Look, you could even be really picky here and even go for this one here, which, this would have worked then. You could have even gone for this one. I think it's, yep, this one here. There's another one within the section there. You could have even gone for that one there, and that would have worked. Again, look, it's totally up to you how you apply this, but there are 2 QMs within this area. So we broke through this demand and we reacted from this area, nearly reacted from the a drawn Quasimodo support. But look, let's assume that we broke through here, but look at this reaction. But why did it react here? This is such a nice area. Look, we do have supply at this point here. Let me just get rid of this. We do have a supply area at this point here, which I don't like. I wouldn't have probably taken this trade purely on the basis of that. Now, if this supply wasn't here, if this reaction wasn't here, and this was just a clean sweep, this would have been a very, very nice trade indeed, because we have supply at this point. Look at all the resistance at these points here. Sellers coming in, sellers coming in, sellers coming in. Please, please, let's continue lower. What happens is we whipsaw above that area and we come lower. Okay, and we do the same again here. We come lower, sellers are in, take their break even stops out, break this high, trap more breakout buyers at this point here, because they're going to be looking to buy at this point and then sell into that. Okay, so there's a lot going on the charts. It's not, guys, if you're just simply running levels and hoping that they're going to react, that's not really the way I would recommend you trade, is because there's so much information you can gain from the chart. Just the charts, as in the approach, is just one of the major factors, right? So the approach, we know we got supply here. We know we've taken out a number of stops above here. It's just obvious because we formed a lower low. Now, what happens when you form a lower low is sellers come in, sellers come in, sellers come in. Now they're in pain, but they've survived because they've probably got their stops above this supply, right? Now they haven't. They've been taken out. Okay. So, and then I've labeled up a few more. I won't go into detail with these, but it's just to try and give you an idea of almost to open your mind to not just the let's fire up this supply and hope it works. We have to look at a number of components before you can actually take a trade. This is just, look, guys, this is just my through my experience that I've found. It might not necessarily be your way, and it may not necessarily be another trader's way. This is just my way of analyzing the charts. I like to go into detail as much as I possibly can to understand how things are working. So look, as you can see here, we have a few I've labeled here that failed, but did retest as a Quasimodo support term resistance. We also have this. This is a Quasimodo resistance that reacted. This one was lovely, wasn't it? So this one, left shoulder, high, bear trap, continuation higher, and a lovely reaction. You will see these happen, but guys, do look for something to break. Do look for stops to take, right? We look for stops to take. We look for pain. We look for areas of pain before we react from these areas. Okay, now I think these are that's the last charts, and we will be heading over to the charts. There we go. Right, so let me just throw over the let's just okay, let me just, sorry about this, guys, it doesn't seem to be working, so I need to, there we go. Okay, right, guys, just to confirm, you can see my charts here. I'm now on the Bitcoin. Just throw in a Y or an N in the charts, in a chat box, please, just to let me know that I won't be talking to myself. Yes, thanks, guys. Excellent. So look, Bitcoin again, guys. It needs no introduction at the moment. There is a lot of pain going on in the crypto market. I don't see many. I've actually got Twitter on my other screen, like the what's going on. I do not see much positivity surrounding the Bitcoin market, the crypto market right now. Certainly not by the dips that was so prevalent during the during these times here. Anyway, let's get rid of the RSI for now. So we have I did mention that we have a Quasimodo support at this point here. Whoops, let's get the percentage off. At 18,099, and we also have a number of Quasimodo support term resistances. Now look here, obvious one, right? Low, high, lower, low, continuation higher, break to the downside. Nothing happened here. Okay, nothing happened. It's a losing trade. If you went long at this point, it's a losing trade. But the Quasimodo support term resistance could be somewhere you see price react if we ever get back up to the 35,000 region. Again here, guys, same thing. Low. Let me zoom in. Low. Let me get rid of the cursor. Low, high, lower, low, continuation higher, and a break to the downside. Look, there was not much stopping Bitcoin in terms of support at that point. It was all mainly resistance. So I was kind of looking at the break of the Quasimodo supports as resistance. And as you can see, these were left unchallenged. But this one is interesting here, the 23,111 level. So if we go across and we look why I've got this. Now, this confused a few attendees last time because it wasn't a traditional structure. And the reason why is I took it from here. Now, let me just see. So we have, let me just go down to the lower time frames. This might help explain it a little bit better. Bear with me, guys. I just hope that the H4 is good enough. There we go. That's better. So this is the same daily QM, right? So we have a low, we have a high, then we have a lower low. This is the bear trap. And then we have a continuation to the upside. So it's really, this is the 4-leg structure that I was talking about. So traditionally, you would need to see a downtrend forming, right? You would need to see lower lows, lower highs, lower lows, lower highs, lower lows, and then your QM support formation form. In this case, I found that you can actually find fake out points. Again, look, at the very beginning of part 1 and at part 2, I did say that I see this more as a fake out formation, not so much as as traders like to say, Quasimodo. So I've adapted this to suit my style more than anything. So I have a low at this one. Let me go in further. So I have a low, a high, a lower low. So at this point, we have our bear trap, right? This is our bear trap. Low, high, lower low, continuation to the upside. Now, you may be wondering why price tested this level here. It doesn't matter because we haven't broke this low to confirm the QM. So anything that happens prior to breaking this high does not matter. The QM is still intact, right? So if I go back to can you pen draw the legs? Yes, no worries. Just give me a second. That's a good idea. Okay, so look, this is the leg. So remember, let me just, so remember, in the traditional sense, we would need a low, lower low, lower high, lower low, lower high, lower low, and then we'd need to see the Quasimodo formation take shape, right? At this point. So this is your left shoulder, this is your bear trap, and this is your QM support. We all understand that that's the traditional way. So it's a reversal structure coming from a downtrend. Uptrend, it's the same thing. It's just reversed. But here, what I've done is I've literally ignored this leg here. I've ignored the downtrend component. So what I'm looking for is, as I've already said, I look at these more as a fake out formation. I look at these as a fake out, as in creating bull and bear traps. In this case, we've created a bear trap. So we have leg 1, leg 2, leg 3, leg 4. 4-leg structure. I guess you could say, yes, no, for me, this is a 4-leg structure. Leg 1, leg 2, leg 3, leg 4. Very, very simple. So we have a leg at this point. So this forms the low, this forms the high, this forms the bear trap, leg 3, leg 4. We continue higher. As I said, guys, it doesn't matter that price tested this area at this point because we haven't confirmed the QM yet. So look at the QM. Look, to confirm the QM, we need to break this high at this point here, right? And that's that high at this point. And we haven't, and we only do that at this point here. So all of this mess here does not matter. So do not worry about that. So look, I hope that's good. Yes, Daniel, it's not so much a, yes, at this point, let me just confirm that. So if price, let me just get rid of those drawings, or some of them. Right, so at this point, yes, there, as I said, there's this is the 4-leg structure. It's more of a continuation formation. If price did this, so this is the structure, right? Price comes up, and then we test this level, and then we continue higher. Yes, you are completely right there, Daniel. It's a continuation structure, but for this example here, it turns out to be a simple Quasimodo support term resistance at the right-hand side of the chart. But yes, I have no control. Once price breaks that high, if price comes back to this area and retests this level, then so be it. It's a continuation formation. So traditionally, the Quasimodo resistance and support are reversal structures, as I've shown here. Okay, this is what I would recommend you learn first. Understand that and understand the basic structure before you go on to the 4-leg continuation structures, which is, look, I've not seen this shown by other traders. If I have, if it is being shown, fantastic. But if not, fair enough. This is how I look at it. This is more of a continuation structure. As I said, guys, this is more of a fake out to me. It doesn't have to have the weird Quasimodo names or anything like that. Can you show some 4-legged reversal, bull or bear? There is no 4-legged bull, reversal, bull or bear. As you can see here, this is the reversals. This requires 5 legs. 5 1, 2, 3, 4, 5. 5-leg. So the 5-leg reversals I showed in, I showed mainly in part 1. So for anyone that hasn't seen that, do go ahead and look at that. That's the main reversal. I actually showed that in this presentation as well at the very beginning at these slides. That was the 5-legged reversal. As I showed, remember there was legs 1, I'm not going to write it out, 2, 3, 4, 5. Okay, 5 legs. But this is a 4-leg formation. Now, if we do not get this, now let me just go back to, if we do not see this happen, this point here, as we haven't seen, if we see price continue higher, right, after breaking this high, then so be it. We have a potential setup at the far end of the chart. Now, just to be clear, would I trade? Let me go back to the daily. Remember this line, 23,111. This is the daily chart. Now, would I trade this level here? This is the Quasimodo support. No, I would not. Why? Because we're actually coming. The sentiment is so much against us at this point. I would not be buying, entering long here. I just would not. This just does not make any sense. So I would wait for the break or break below the level and a retest of the, let me go down to the H4, right? So as you can see, break below and look at that retest almost to the pip. Break below, retest to the level and another near test of this level. Now, there was something else on Bitcoin I really wanted to show, and this was just, look, this Quasimodo support at 18,099. Look at this, a fake out below the 20K area of Bitcoin, straight into that Quasimodo support. Now, if you get Quasimodo supports, remember, as I said in the slide, if we get a Quasimodo support or resistance above a clear support or resistance or a round number even, as we have here, the 20,000 handle, the Quasimodo support does a very, very good job of helping to facilitate what's known as a stop run, because you're running stops below these large figures, as large figures do contain a number of buyers and sellers. And what happens is you'll have breakout sellers coming in below here. You'll also have the sell stops being tripped from those attempting to short buy into that 20K level. How many traders have you seen highlighting that 20,000 on the Bitcoin chart is the next support? This is where we're going to buy into the market. The amount of interest around that area was insane. So it was just open to a whipsaw. Right. So there was also the dollar Swiss chart. And this is something that was absolutely fantastic for me. Very basic. We have again, a 4-leg structure, guys. Low, high, lower, low, high. This is not a continuation pattern because after this point, we did not come back and test this area, right? So low, high, fake out to the downside, a minuscule fake out, if you will, and a continuation to the upside. Now, would I sell in? Would I buy into all of this? Not really. I really just would not fancy buying into that just based off this Quasimodo support. So I'd wait for a breakout to the downside. Now, what happened is we reacted from this demand, clear demand, right? Clear area, clear decision point. Decision point broke to the upside. We broke this high. We broke this high here. Clear decision point. So buyers coming in from this point here is not a surprise. Now, what happens is buyers come in, and they think it's time to buy into this market. Fair enough. What happens is price drops lower and forms a lower low. What it does is it takes out any buyers that reduce risk to break in, which there would have been a number that would have done that at this point here, especially after seeing this shooting star here. There will be a number of a number of buyers reducing risk to break even at this point. Now their stops have taken out. Now we've formed a lower low, and we've also interested potential short sellers into the market. And really, what we've done is what that's done is really almost invalidate this area as a demand. So after the lower low, what happens? Price whipsaws back to the upside, causing the utmost confusion because we've now taken out this high. Now, once we've taken out the high, what happens? Breakout buyers come in. The trend is changing. We're going to the upside. So what happens though is we test this Quasimodo support term resistance. It's hidden at this point. There's really nothing at this point telling us that there's anything to sell from. What we've done is we've taken out all of that pain above that area, because all of these sellers that sold at this point, attempting to sell, because they think that this lower low means that they are going lower. They get their stops taken out. Breakout buyers come in as well, and they get absolutely smashed. Okay, so this is just a really great example I found. Now onto the, I didn't see that. That just happened. Onto the, let me just make sure I'm sharing the right screen. So question, is what you show to be more classified as a fake out? For me, it's a fake out. I don't think anyone would argue with me that you can call it whatever, Quasimodo support rolling car, you can call it whatever you want. It's a fake out, isn't it? We have a low, we have a high, we have a fake out below that low, and then we continue to the upside. There's not much else. It is a fake out, it's a whipsaw. Call it what you want, as long as you as long as you understand the dynamics behind this. Fantastic. You can call it what you want. It really doesn't matter. Right, so we have, this is a live area I'm watching right now. So I really, really like this. This may confuse you a little bit. Let me just check, not this one. WTI. So WTI on a 15-minute chart. As you can see, we have demand here. Demand, trust. But below this demand, this didn't happen by the time I drew this up, by the way. Below this demand, we have a number of Quasimodo resistances turn supports. Not only that, we have a clear-cut trend line support converging with those levels. So this is an ideal area to see price fake to. Again, guys, this is all my view, guys. You shouldn't take this as an investment advice. This is just my view. So we could potentially see WTI fake below this demand here. Again, this is very short term, M15, and we fake directly into all of these QM supports at this point here. There's nothing here telling you. There's nothing here at this point here telling you there's anything to buy from. So you might see a whipsaw below here into this area and a continuation to the upside. Yes, it is the 15-minute chart, Daniel. What would be your usual stop loss to avoid the fake out? Avoid the fake out in terms of this chart here. Now, this is the tricky part, right? Because you're almost buying at an area where there's not much to go with. This is something you'll need to test, of course, to be sure. But what I sometimes do is I drill down to the even lower time frame. So here we are on the M15. We can drill down to the M5. Let's go back to that area. And now we have some bases here. So what I would do in this case is put my stop below here. Okay, so I know we have some base support. So if I zoom in, I'll show you what I mean. Some demands, almost a stack demand. So I would put my stop below here, to be honest. As you can see, our entry area would be around this point here. My stop would be below here. Again, very short term, guys, and this is something you need to test in terms of support, terms of stop losses, where you're going to place your entry. Entry is pretty simple, guys. You have an area here. You have an area made up. And look, if you only have one QM resistance turn support at this point here, go down to the lower time frames and look for what's going on. Let me just show you. Let me go into that area. Look for what's going on around that upper range. We have an area there on the M5, right? So you can use that to base your entry. You can even go long at this point here to avoid missing the trade. So you're going long at this point here. Let me zoom in so you can see. So this is the demand that surrounds that area. So you can go long at the top of that area and place your stop below here if you're aggressive. But if you're conservative, I would consider this area at this point here. From Victor, we have a question. What kind of time frame works for Quasimodo? Is it more of a short-term pattern? Look, for me, it really depends on you. It depends on you. These work on all time frames, as I've shown here, that they are present on all time frames. I do like the H1. I've really found comfort with the H1 time frame for these types of setups. So, and it suits my my commitments and my work, my commitments very well, because you may be studying full time, you may have other jobs, so it really all depends on you. But from what I've seen, they do work on all kinds of time frames, right down from the minute to the monthly time frame. Okay. All right. So I see a lot of questions from Daniel. Never use a tick chart. Should one do so? If you're talking about a tick chart in the futures market, why not? A tick chart. Are you talking about like a 300 tick chart, something like that? I'm not sure what you mean. I've never used a tick chart in the FX market. How often do I use volume? I never really use volume in the FX market because it's based on ticks. That's not to say it doesn't have value. It certainly does, but I prefer to use the volume derived from exchanges, not from broker fed, if that makes sense. Okay, right. So let me just see. Just show WTI. Where would you put the QM support on Brent? I haven't even had a look at Brent. I've got one more chart to show, and time is right. Here we go. This is the last chart I have to show, and this is the dollar CAD H1. Right. So as you can see, we have a clear supply here, right? We have supply at this point here. Reaction, reaction, reaction. Things are not looking good for the sellers. Price is coming in. Price is coming into this area. Now, what we have here. Now, look, this point here. We have a left shoulder here. We have a low, high, lower low, high. Again, a four leg structure. I did say I would go into detail, and I'm trying to go into as much detail as I can with this 4-leg structure. So we have a leg 1, leg 2, leg 3, leg 4. But coming above this coming above this supply, this is just too obvious. This is just too close. These two legs here. This is your low, this is your high, this is your fake out. So why not just go up a little bit more? There's one here. Look at this, right in the corner of that area. We have a low, we have a high, we have a low, we have a bear trap, but then we have a subsequent high. Same high as this formation here. Use this one. It makes much more sense. There's really nothing here telling you that sellers are going to come in at this point. So we look for a fake out above this supply. Yeah, above this supply into this level here. In this case, if you wanted to be conservative, instead of drilling down to the lower time frames to find a supply, you could simply place your stop above here. Because look at this. Look at this point here. Look, what does this tell you? This tells me that we have consumed supply. There is really nothing here telling me that there's anything going to happen here. So if we break this high, it looks like we are going to look for higher levels at that point, because there's really nothing here telling me that there's any type of resistance. So if we break that high, we know we're potentially going higher. So my stop would be above this point here. So short from there, stop above there, and look to potentially trail this market. Right, so I think I've covered all of the charts I really wanted to show. So with that in mind, I'm going to switch things back to the slides, and then I hope you can see this, guys. So there we go. Oops. Sorry about that. There we go. So look, as I wrap things up, I know I've thrown quite a lot at you. This is not simply a double top pattern or anything like that. This is quite in depth, and but I sincerely hope you at least took something from it, and traders are able to walk away, from this presentation slightly more knowledgeable. And yeah, so I hope it was of use. As always, look, if you want to get in contact with the research team here at FP Markets, you can use the Market Analyst at fpmarkets.com email. Alternatively, you can use the support at fpmarkets.com. What happens though, guys, if it's something that I need to, or the research team needs to comment on, the support team will just email the Market Analyst team. So if you really want a quicker reply, head for this email here. Look, in terms of upcoming webinars, guys, we really have quite a packed session for July. We have supply and demand, an essential guide on the 7th of July, and we also have an NFP live session on the 8th of July, and that's a live session, guys. And then we also have supply and demand part 2 on the 14th. Then on the 21st, we'll be looking at correlations in your trading. And then finally on the 28th, we'll be looking at backtesting. So different ways we can backtest in the market. So look, thank you, JC. I'm so sorry if I've pronounced your name incorrectly. It's so difficult to read names. I should really not refer to anyone by name. I should just say attendee, but I feel it's yeah, so I apologize if I've pronounced it incorrectly. Look, on that note, I really hope you've taken something from this. This is something I really enjoy. I'm passionate about price action trading, and if you again, guys, look, send me any questions you want, and we'll happily get back to you and clear up any confusions you have, or any questions I did indeed miss during this presentation. Okay, on that note, thank you so much for your time. Have a wonderful day, and I'll catch you all again very soon. Thank you so much.